Hello and welcome to Breath Hour Option Mentoring. I'm Zach Breathhour, and today I wanted to take a quick video lesson basically to look at intraday entries, very low risk intraday entries using Bollinger Bands, Fibonacci ratios, and the daily pivot points. So first what I'm going to do is lay a little groundwork here. We're looking at the FAS right now. And it's been going up at a phenomenal clip the last 3 years. So first I want to identify, this was back on 4/9. Basically the market had been going up for a long time. Banks were, continually putting out good news. They're getting recapitalized, all those good things. So this has been basically a nonstop train to the upside up until 4/9, and then it looked like it was going to possibly meander sideways. It looked as if there could be a head and shoulders pattern possibly building, but for whatever reason, this right shoulder here never formed, and you can tell with these quick buys on all these small dips that the potential for the market to go higher was there. So basically what I did was once it gapped up after that resistance, which was formed right at this little peak right here, this is where it's knocking its head up against that resistance. Once that resistance was broken, what I did was I went to my drawings tab in my Thinkorswim platform, and I am going to want a Fibonacci extension. So what you do is you go from the low from the previous move to the high, and I have the open high low snapping for the drawings on. That really helps to grab, the high or the low, whichever one. Click on the top there and bring it down to the low before that resistance was broken. Okay, so at this point, I mean on this day where it gapped up, you could tell that it could go higher. And when that happens, when you get a gap up like that, you use these extensions to see where's the next batch of sellers going to be waiting, and that's the 78.6 Fibonacci extension that we're seeing right up here. So once that gap happened, I went long, and I'm waiting for price to basically knock its head against this 78.6. Now, the point for me bringing this up was what I did when it actually did reach that. Not only did I sold exactly at the 78.6, but on that day, what I did was use something I'm kind of coming up with called gang theory, where, okay, there's sellers waiting at the 78.6 Fibonacci extension. There's sellers because on that intraday, it actually broke through the Bollinger Bands, and when price I think it's like 87% of price can usually closes inside of the Bollinger Bands. So that was the second thing that I noticed. And third was I always have pivot points overlaid on my charts. Now I have the day, and what I'm going to do is actually expand these so that it'll cover my entire price chart. Give me 1 second. Edit pivot points and show only today. No, so I want to see all of them. And it kind of, it's a little bit hard to see, so I'll zoom in. So on this day, where I met my price target on my long positions, you can see that, and it's a little bit hard. I might have to get in there a little bit deeper. Either way, the top of the pivot point for that day, the top, or I believe it's called an S2, or I'm sorry, R2 resistance, is actually right at the 78.6. So when price on that day, due to exuberance, what may have you, not only cleared the 78.6, but left the Bollinger Bands and had already basically gone past resistance 2 for the daily pivot points, I was able to come in short here because even though price there were buyers to throw price, and there was exuberance to get price outside of these lines. When you extend on 3 different indicators, you're overextended on 3 different indicators. I am happy entering an intraday short position. And that's exactly what I did. And you can actually see that not only did it come back into the realm of the Bollinger Bands or even the 78.6, but it sold off because basically all the short sellers waiting to get in at this 78.6 were able to get in at such a good price that they put their basically their stop losses above the Bollinger Bands. And when that happens, you can really step, for lack of a better term, you can step on the neck of the buyers and just keep selling it down. And it actually closed very low. That's a bearish engulfing pattern for candlesticks. Um, and so I was able to actually get my stop loss in this scenario above the Bollinger Bands and just let it ride. I think I bought 6 months out put options on the FAS. And for this lesson's purposes, that's basically what I wanted to talk about, was using pivot points, using different connecting indicators to get an idea of how many people are going to be willing to sell at that day where it does get, over exuberance and stuff like that does get a little out of control, and be able to get in a position and get a stop loss where I'll be able to take a good amount of profit without having to actually do anything, because my stop loss will kick me out if and when I'm wrong. And that's it for this quick lesson. I'm actually going to do another synopsis. This scenario happened again on the downside, and in that one I'll talk about Fibonacci retracements, in which case price retraces and uses the different Fibonacci ratios for support. But that will be next, and I hope you enjoyed this one.